Monday, May 15th, 2023, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at the mining industry. There's some interesting developments that are showing me that things are probably just about to get very interesting for the precious metals. Of course, that's my opinion. It's not financial advice. Before I start though, yes, yesterday you noticed I didn't do a live stream, mainly because my wife and I went out with friends for lunch and we went somewhere else afterwards. So we're home relatively late, but it will continue next Sunday. I did post an interview I did with Elijah Johnson on his channel, on my channel as well. So there is some extra content there. And before we get into the mining, what's happening in the mining, gold mining industry, I just wanted to talk about privacy because I've seen a clip here of Klaus Schwab, the head of the World Economic Forum. And he's speaking to, I think, a reporter in Geneva or in Switzerland or maybe even in France because he's speaking in French. And he's saying that people have to get used to having no privacy. He said, if you don't have anything to hide, you shouldn't worry. And yes, that's what he wants. That's what he wants the world to be like. But what I would say is that you have to basically, I know it's hard because the tentacles of this World Economic Forum, Fourth Industrial Revolution, New Brave World philosophy has permeated all the big corporations that unfortunately we have to do business with. After all, I'm using an Apple computer, I'm using YouTube, but is there a way to fight back against this? I think it's all up here. First, we need to know that these people are our enemies. So we need to know our enemy well, and we need to know ourselves, and we need to expose them, to tell others about it, because that's the only way this is going to stop. One of the things that I try to tell people about on this channel is not just the fact that precious metals will protect your savings versus the massive inflation that we've had since 1971, really. Don't let them tell you otherwise, that we haven't had inflation. But it's also a matter of privacy, having a few gold coins or bars or silver coins. It's privacy. It's outside this banking system that's becoming more and more draconian. There's no privacy. There's a lot of controls. And I think that's wrong, because basically a world with no privacy, where the government and the big corporations are watching your every step, it's not a world that, how can I say, it doesn't really correspond to our Western principles of freedom of the individual, privacy. And yes, some people do wrong things. They do commit crimes, but that's something different. The majority of the people don't, and they shouldn't be subjected to this. That's what I would say. So there you go. I don't know if you guys follow Twitter, but this clip is on Twitter and someone translated it. But with that, I just wanted to say also, give a shout out to my precious metals affiliates, the dealers in the US, like ITM Trading. ITM Trading will help you plan a strategy to build wealth through precious metals, even in these uncertain times. So if you like to connect with them, there's some details below in the description. So back to the mining industry, what's going on there that I think is significant? Well, I was just looking through here at Gold Telegraph on Twitter, and it says breaking news. This is about 3 hours ago. Newcrest Mining accepts 19.2 billion Newmont takeover deal. Deal making in the gold industry is very hot, says Gold Telegraph. So, and they say as well, the transaction is the gold mining sector's largest deal to date, surpassing Newmont's purchase of rival Gold Corp in 2019. So why is this positive? Well, because Newmont, I'm not sure if they're the top, but they're at least top two with Barrick mining companies, gold mining producing companies in the world. They need to take over a smaller rival because they feel that it's the place to be. And the other thing it shows is that their current properties are probably running out of gold, and that they need to diversify and add on new properties. And that's how the mining industry works. So I expect to see more consolidation, and I expect some smaller junior miners maybe to be targets. I'm not saying I know which ones they are, and it's up to you, of course, as I always say, to do your research and your homework. It's a very different business, being a gold producer and an explorer. Of course, very few small gold mining exploration companies really succeed, and they spend a lot of money drilling, trying to prove that they have great properties, so that people like Newmont or Barrick and others buy those properties or buy the company outright. So I think it's all getting very interesting, and it shows that the executives in these big mining companies, they don't think things are going to get worse. They wouldn't be doing this takeover, in my opinion. Of course, they might not be right, and it could be a huge failure, of course, but I would say the contrary personally. And why? Well, because our current banking, financial, monetary, and even economic system is in trouble right now. There's a lot of credit that's being deflated out of the system. And unless the Fed and other Western central banks and governments want everything to collapse and implode, they're going to start trying to pump up the credit again. They might have to do it through government credit. And that's going to put a rocket up, not just gold and silver, but all hard assets, real assets. That's the way I still see things. I don't expect interest rates to go down back to zero like some do. We're in a world of stagflation, and I think once the central banks, and I think they're already shown that they're ready to intervene when there are accidents, but once they really pivot, the hard assets, commodity space is going to be the place to be. And we haven't had much investment in that sector because the CRB index, it made a top in 2008. So yes, there's a lot of potential, I think. And this, as I said, this takeover of Newcrest by Newmont Mining is a very good sign. So with that, let's quickly look at where the markets are this morning. It's just before 8:30 a.m. London time. We've got spot gold at 2019. It's up about $8. The high is right around here. So it looks like there's a bit of resistance around 2020. The low's been 2007. Spot silver is up 14 cents, just under 1%. It's at 24.10. Low's been 23.87, and we're right around the highs of 24.13. Dow futures is up 82. The S&P 500 is up 13 points. NASDAQ 100 futures up 38. To the currencies, we've got sterling up 0.25%, 124.80. The euro is up 0.2 at 108.70. Dollars unchanged versus the yen, 135.85. Dollars down a bit versus the Swiss franc, 89.65. And the dollar's down 0.2% versus the yuan at 6.96. Let's quickly check the ruble. Well, the dollar is up almost 2% at 78.70 versus the Russian ruble. Aussie dollar is up 0.2% at 66.85. The dollar's down 0.33% versus the Canadian dollar, 135.18, and the Kiwi dollar is up 0.5%, 62.27. To the commodities now, we've got platinum at $1,065. That's up $10. We've got WTI crude down 0.2 at 69.85, and we've got Brent as well down about 0.25% at 73.84, and high grade copper is up 0.5% at 374.60. Let's quickly check the bond markets. The 2-year yield, U.S. 2-year yield is down a couple of basis points at 3.98. The 1-month T-bill is at 5.72. That's to do with the debt ceiling impasse. The 10-year yield is at 3.48. That's up 1 basis point. And let's quickly look at the UK gilt market or government bond market. The 2-year yield's at 3.84. That's up 3.5 basis points. The 10 years at 3.82. So the curve is inverted as well here. And one more thing about the UK bond market and interest rates. I saw an article here over the weekend. UK mortgage borrowers face painful refinancing, warns think tank. Resolution Foundation says 12 billion pounds costs of rising rates have yet to hit most households. So that's pretty interesting. And the thing is, I'm not sure how the mortgage rates are reacting right now to the rate rises from the Bank of England. We saw them raise rates to 4.5% last week. But I noticed, as you saw, that the 2-year yield is still at 3.84, and that's the rate used to set mortgage rates. So right now, we'll have to keep an eye on that to see if the mortgage providers are actually what the spread is between these government bond rates and the mortgage rates. I suspect it's quite wide. So people that have mortgages are not getting the benefit of this very low yield environment. I would say you might say it's not low because it was near zero, but when you have inflation running in double digits, government bond yields should be at least at double digits, not below 4%. So with that, I'm going to wish you all a very good day and a very good start to the week. Take care. Bye.